Hello and welcome back to First Place TV. My name is Tumelo Makgakga. I am a qualified chartered accountant, a registered tax practitioner, and a registered auditor. Today I will be addressing the question, what is an IRP5 tax certificate? Stay tuned. So what is an IRP5? An IRP5 is an employee tax certificate, and the key word there is employee. And you will understand what I mean by that. An IRP5 is a summary of all the taxes that an employee or an employer would have withheld from an employee during a tax period. So let's just bring it back to the beginning or to the basics. So if you're employed somewhere, you're working for a company, and each and every month you get a salary. You are an employee, you have got an employer, so the relationship between the two of you is employee-employer. The employer pays you a salary every month, but in that salary, they withhold taxes every month. If you earn 10,000, they will pay you slightly less than 10,000, and the difference between what they pay you, which is the net, and the gross, is the PAYE, pay as you earn, the UIF in most cases. If there are other deductions, maybe there could be company-specific deductions, but to keep it simple, those will be the standard deductions. Now, in South Africa, a tax year for individuals starts from the 1st of March and it runs through all the way to the 28th or the 29th of February. Now, at the end of the tax year, after February, your employer must do what is called an employer reconciliation. That is to say that they will go back and reconcile all the taxes that they have withheld from your salary from the 1st of March of the previous year all the way to the February of the following year, which is the full tax year. Once they reconcile that, they must then account to SARS to say, we have withheld these amounts of taxes every single month, and we have paid them over to you for this particular person, for our employees, on an employee-by-employee basis. So they do that employer reconciliation, and after they do the employer reconciliation, for each employee, a document will be generated, which is called the IRP5. So that's where the IRP5 comes from. And then these documents will be distributed by the employer to each and every employee. Now, you as the employee, your employer will send you an IRP5 document. And in this document, it will be a summary of the amount of money that you've earned from the 1st of March all the way to the to February, or the next February, which is a 12-month period, and which is the tax year. And then this document will also show during this period, taxes that you paid amounted to X, UIF that you paid amounted to X, but you didn't pay it yourself. Your employer withheld the money from you whilst paying your salary every single month, and they paid that money over to SARS. Now, this is to help you that when you go and do your individual tax return, SARS already has information about taxes that you were paying during the year, so that they mustn't tax you twice. Now, if your employer has done the right thing and they've submitted the correct employer reconciliation, and they've also paid over the taxes that they withheld from you during the year, SARS will have a record. You will see that when the tax season opens for individuals and you eventually do your tax return, the information from your employer will be pre-populated, and you will not have to input that information. That information, SARS would have received it from your employer, and that information, 9.9 out of 10 should match to the information that you have on your IRP5 document. So an IRP5 really is a document that summarizes all the taxes that you have paid during a tax year. And this document is applicable to people who are in an employer-employee relationship. And that is to say that every single month you get a salary, and when you get your salary, your employer has already withheld PAYE and UIF, and they pay you what is remaining. So there's a gross salary and you get a net salary. And the difference between the two is the pay as you earn, the amount that is due to SARS, as well as the UIF, the amount that is due to the Department of Labor. Now, yeah, I think that's a good summary of the IRP5 document. It's merely just a summary of your taxes during the year of assessment. Now, you can use this document to see how much tax are you paying in a year, in a given year. How much taxes are you paying? You can also use this document to also understand which tax bracket do you fall in. You can also go check, okay, my salary has increased this year compared to last year. Now I've paid more tax. And also you can monitor the individual income tax brackets, because those increase or are adjusted every single year when the finance minister does the budget speech. So yeah, that is an IRP5 document. Ladies and gents, you know, here at First Place, we are registered tax practitioners, we are accountants, and we're registered auditors. So if you do have some queries or you need assistance with any of the services that we offer, please do not hesitate to reach out to me or to my team using the details that are showing right now on the screen. Be sure to share, to like, to comment on this video, and to subscribe to our YouTube channel. Cheers. Here's a bonus point, something I forgot to mention that I thought about when I was driving home. And I thought, let me just slot this in as a bonus point. So what happens if you are not in an employer-employee relationship? Well, in your case, if you're not in such a relationship where an employer is withholding tax every single month and paying it over to SARS, you are likely to be what is called a provisional taxpayer. And with provisional taxpayer, SARS has different rules. So you wouldn't have an IRP5 document. And what it would happen in your case as a provisional taxpayer, every 6 months, that is from March to August and from August to February, you would have to file provisional tax returns. So in August, after the first 6 months, you would file a provisional tax return, the first provisional tax return, and then in February again, you file the second provisional tax return. Now, provisional taxes are something completely different to PAYE, and SARS looks at you as a person who's responsible and accountable for your own taxes. Obviously, no one is withholding tax on a monthly basis, but so then if you do have an income, SARS is assuming that every 6 months you will make a tax estimate of how much you estimate to earn during the tax year, and you would pay taxes according to the rules for the provisional taxpayers. So yeah, you wouldn't have an IRP5 document, and then after the tax year has completed, March to February, SARS will then look at your provisional taxes that you filed, the first one and the second one, and then assess and compare that with your actual earnings for the year. Now, if you didn't file provisional tax returns, that means that you'll be starting from zero. Whatever amount that you earned, SARS will have to tax you according to the tax table. So if you earned 1 million or 2 million for that tax year, now SARS will look at that and say, according to the tax table, how much tax were you supposed to, are you supposed to pay according to the tax tables? Now, because you wouldn't have, filed your first provisional tax return and your second provisional tax return, in such a case, you might even incur penalties for failing to file provisional tax returns. No, I just thought I should just slot that in for you guys as a bonus point. You can see that I'm already in the car, and yeah, I just arrived home now. So cheers, and cheers for real this time.